Hello, good morning, and welcome to another live technical analysis session. Starting off with the euro against the US dollar. So, yesterday we said that we're going to be diving into the financial releases that were released yesterday, and we're going to be analyzing Fed Chair Powell's comments. Now, if you look at your calendar, you would have seen that it was Fed Chair Powell and Fed policymaker Goldsby that were due to speak, but Goldsby acted as a moderator. As such, any comments he's going to be making later on today could potentially impact the dollar. And personally, given that he is a well-known dove, I would expect it to potentially weaken the US dollar. Now, moving on to the euro against the US dollar. So, despite the relatively dovish sentiment emerging from the ECB, we're seeing the euro actually gain against the US dollar. Note the downwards moving trend line that we had stated yesterday has now been broken. Note the 4-hour candle that broke above, so open higher than the trend line and is moving higher. As such, we switch from our bearish outlook towards a bullish outlook from a technical point of view and from a fundamental point of view. So let's go into the US financial releases. The ISM non-manufacturing PMI figure came in lower than expected, which may have disappointed some economists who may have been hoping that the narrative that the US economy remains resilient is now appearing to be put into question. Tomorrow we have the US employment data, so that's probably the main event of this week and could potentially alter the pair's current direction. Should it come in better than expected, we could see the greenback strengthening, or lower than expected, the euro could capitalize further on a weaker US dollar. Now, in terms of what Fed Chair Powell stated yesterday, so what the Fed Chair implied was that despite the recent financial releases implying a relatively resilient US economy, it does not appear to be concerned. So, implying that it might be temporary or just 1 month's data showing an uptick does not suffice for the Fed to change course/direction, and as such appears to have been perceived as dovish in nature. So the ADP yesterday came in better than expected, provided some support for the dollar, although temporarily, because Fed Chair Powell's comments, relatively dovish in nature or predominantly dovish, have weighed on the US dollar, which is why we're seeing the euro move higher. Now, let's move on to the technicals. You've got RSI at 70, so a bullish market sentiment appears to have emerged. Broken above resistance now to turn to support allows us to switch for a bullish outlook. So let's turn this to green. R1 now becomes S1, S2, S3, and so on. Resistance, we're keeping that at R2, 1.0890, which is our new R1. So let's just change these as we're going along. So that becomes S1, turn this to green, S1 old becomes S2 new, then S2 becomes S3, and then we could keep old S3 as S4, just in case it breaks below, and we can use that later on as well. S2, then we move on to S3. This becomes S4, our size 70. Now, this bearish candle that appears to be emerging on the 4-hour time frame, not surprising. Look, it's at the upper bound of the Bollinger Bands. Might be due a small market correction back down to S1, so validating resistance. Excuse me, turn to support, and this becomes R1. Now, we could, in theory, bring R1 slightly lower as well to reflect the current price action, but for now, perhaps a small readjustment on our R1 level, coinciding with this price action here. Zoom this in. This was a low, found support, broke below, turned to resistance, came back down. So we might actually see some resistance here. I think it bounced off. I'm going to be using this low for R1. I'm going to be bringing R2 lower to this old high. And then for R3, we can use this wick here. So we're just readjusting support and resistance levels to coincide with the recent data. So it's meeting resistance at this point. So it appears to be some selling pressure. So it makes sense that the resistance level might have been slightly lower than what we had placed yesterday. 1.0875, that's for R1. We'll be looking at gold, oil, and as well as other pairs as usual. 1.0935 for R2, 0.0935. And then for R3, 1.0980. So rounding that up. And that's R3. Magenta, we need red. Text label 0.0980. So you have R1, R2, R3. So you have support and resistance. Bullish outlook. The way I'm seeing it now, I'd expect it to retrace lower. So perhaps to the middle of this bullish candle or coming back down to test support or resistance turn to support before moving higher. So it might be due a small correction lower or could continue. But for our bullish outlook to persist, we would require a clear break above the R1 level, 1.0875. That's R1. So even if it does correct lower, I would not abandon our bullish outlook as long as it stays above S1. Go. USD JPY still remaining in a relatively sideways fashion between S1 and R1. RSI at 57, so some bullish tendencies, but overall appears to be still moving in a sideways fashion. Very narrow Bollinger Bands, low market volatility. RSI tends to support that theory. R1 seems to be holding up, so I would be staying between S1 and R1. So as long as that continues to be validated, sideways bias. Once again, if it breaks above R1, bullish outlook, taking aim for R2, 153.80. Dollar CAD, so the loon appears to be strengthening, currently testing S1. Now, if it does break below S1, switch for a bearish outlook. RSI is moving towards 40, implying a bearish market sentiment, which may be emerging, and I would be attributing that to WTI, so crude oil, moving higher and higher. We'll look at this in just a moment, but overall, oil prices moving higher could be supporting the Canadian dollar as well, which is why we might be seeing it test S1 currently. Now, if it breaks below S1, bearish outlook. In terms of the Canadian economy, we're noting the trade balance for Canada, which is due to release later on today. If you're following us on X, you'll see our recent tweet regarding that. It's expected to improve, so 0.7 billion, if I'm not mistaken, implying that the Canadian exports are perhaps more in demand, so boosting demand for the loonie, which could also be aiding the Canadian dollar. Now, if it comes in lower than expected, could weigh on the loonie, better than expected, or as expected, could support the Canadian dollar, taking aim potentially even for S2 if it manages to break below S1. For now, bearish outlook as it appears to be testing S1, so it breaks below, bearish to S2. If it fails, sideways between S1 and R1, and if it manages to break above R1, which was tested on numerous occasions, then we would switch for a bullish outlook. But I don't see that occurring at least for today. For now, bearish outlook as long as it breaks below S1. So clear break below would be sufficient. British pound also capitalizing on a weaker dollar following Fed Chair Powell's comments yesterday. So this is resistance turned to support. Removing old swan. Testing R1 that we had testing R2, that we had placed yesterday. And given that this is resistance turned to support, we need to slightly readjust our support level. So bringing it higher. This bearish and bullish candle for me look very nice. They're strong. It's not just one. You have two. It wicked down, took out everyone that perhaps had a stop loss here that went long, gained momentum, moved higher. So I would place my S2 at 1.2470. Now it's testing R2, which is R1, 5, 24, 1.2470, 1.2590. So that would be -1. It breaks above R2, maintaining our bullish outlook. Overall, would maintain a bullish outlook for the RSI 63. So bullish tendencies appear to be emerging. Moreover, this is the R2 level that we had placed yesterday. It's broken above R1, taking aim for R2, finding some resistance. If it corrects lower, that's okay, as long as it manages to break above R1 uh, within the next day or so. But once again, you have the NFP. The NFP figure could easily change any technical analysis that we do today. Even if I say that perhaps it would be okay for it to retrace to the mid range before moving higher, with the NFP figure tomorrow, if it comes in better than expected, so resilient US labor market, it could come back down, break below S1, and even move towards S2. So this is a bit temporary, I'd say. Still, R1, 1.2275, that becomes R2, and then R3, 1.2890. Removing this, R4 now becomes R3. Bullish outlook as long as it breaks above R1. Now, the way that one could potentially look at the support and resistance levels is in the event that the US employment data shows a weakening / loosening of the labor market, then R2 and R3 might come into play. So if today, for example, it goes back down to S1 and stays between S1 and R1, based on tomorrow's figure, then the other support and resistance levels could come into place depending on the direction of the US dollar. Now, the Aussie has not only broken above R1, but above R2 as well. And how do we know that R2 was valid? It broke above and then it opened on R2. So the R2 level that we had placed yesterday is now actually S1. And let me just zoom in. Look, bullish candle broke above, and that wick here validated that this is S1, but this is the new for our candle. So for it to be actually S1, I'd like to see this for our candle close above S1, and then I would be okay. As long as it does not break below S1, maintaining a bullish outlook. So R2 actually becomes S2. So flipping our support and resistance levels. Now, in terms of resistance for R3, seeing smaller and smaller bullish candles might mean or imply that the bulls may be finding a hard time seeking liquidity and that resistance might actually be a bit closer than R3. So based on what we've seen, I'd actually keep this resistance level, but I'd aim for something a bit closer to the current price action. So more intermediate resistance level, 0.6625. So that would be my R1. But if you look at it, it's not nice. It doesn't even touch the wick. It's in between this candle. It's not even on the closing of this bullish or opening of that bearish candle. Whereas it's more in line. Even though I'd like to round it up, I think it's more prudent to keep it at 0.6623, coinciding with the closing and opening of this bullish and bearish candle, respectively. So that would be my R1. And then we'd actually need to find R3, and that it's moved significantly higher. Let's turn this to S1. And then 0.653, which was R1 yesterday, now becomes S2. So the Aussie appears to be gaining significantly, which is good for Aussie traders. One could also attribute the potential strengthening of the Aussie to the better relationships in terms of better relationship between Australia and China. If I'm not mistaken, there was a joint announcement yesterday. Could also provide some support for the Aussie, but overall, I think it's due to the weakening of the dollar and hopes about China's economic recovery. Then have S1, S2, and now we would need to find R3. Let's see. Too close. So let's just zoom in. This looks nice. And actually might be okay. But then the distance between S1 and S2 are equidistant. So it might be better. Like this might actually be resistance level. But personally, I'd like to give it some room to breathe as usual, so slightly higher. I'm seeing this bullish candle, close, open, wicked, pierce through, took out people that had perhaps their stop loss around here, taking everyone out, and then moved lower. So this is not a concern. This might have been a resistance level, yes, but it would have been too close to R2. So we're just keeping R3 just a bit higher. That doesn't mean to say that you won't see some resistance slightly below R3. It's just you might find a more significant resistance level at 0.6710. That's R3. And then zoom out. S1, S2, S3. This becomes R1. 6623. Then R2, 0.6665. So we have our support and resistance levels. Overall bullish outlook, RSI 70 broken above. Resistance 1 and 2 turn to support. So overall appears to be bullish for the Aussie. Now in terms of oil, it'd be a very interesting story. So we had OPEC Plus meeting yesterday. So the ministers of the countries belonging to OPEC Plus, the oil cartel group, they agreed to extend their voluntary oil production cuts. So it was sort of expected, which is why we may have not seen a significant movement in oil, but overall could have provided some support for oil. Now, despite the breaking below our upwards moving trend line, I would not switch towards a sideways bias yet. And why? The mid-range of the Bollinger Bands has not been broken yet. This could be a small market correction lower. It was moving higher, found resistance, bears may be temporarily taking control, push it lower, around here, right around here, before the bulls could potentially move it higher. Now, in terms of oil, if you look at recent updates, there appear to be tensions in the Middle East, as we said yesterday. If I'm not mistaken, Iran is also facing some internal troubles as of earlier on today. In the event that we see oil refineries being hit or targeted, that could also boost oil prices. But overall, with the anticipation of a retaliatory strike from Iran, we could see oil prices moving higher. So this does not concern me. As long as it stays above 84.10, I would maintain a bullish outlook. I do believe that S1, 82.69, is a more significant support level, although that could also be changed slightly higher. And we could place it at 84.10. So we'll we'll simply place RS1 at the level I mentioned before, 84.10. New support coincides with the mid-range, so if it does break below, we could switch for a bearish outlook. Overall, I would be still bullish for crude oil. This could simply be a retracement to lower ground before continuing on its ascent. Now, for support, I'll give you a moment to see where you might have placed us to before I place my own. Straight off the bat, I am seeing three possibilities: old highs or a higher low. One, two, or three. This is nice. You have a higher low and an old high, but too close to this one. So I take this point here. Now, you might find support, but it's too close to S1. It's too close to the most recent support level. As such, I give it some room. An 82 as a big figure, significant psychological impact, and potentially for large investors who might like to use round numbers, 82 might be more significant. And then S3, 79.10. This was a sideways moving channel that we had placed, so it's at the old upper bound of this channel. Managed to break above and move higher, 79.10. If it does break below S1, switch for a bearish outlook, taking aim for S2 at $82 per barrel. Next potential target being S3. If it breaks above R1, next potential target could be at 87.90. I believe this is a correction lower as long as it stays above S1. If it breaks below, switch for a bearish outlook. Gold. Bullish outlook we maintained yesterday appears to be validated once again. We could actually place another upward moving trend line beginning from S1. So I have two upward moving trend lines. I will remove the old one. This is the most recent one. Note how it's broken above R1 and is now coming back to S1. So this is resistance turned to support. I would not be surprised if it comes down to S1, gathers support, and then potentially takes aim for an even higher level. Now we need to readjust our support and resistance levels. It's too close. Now, based that it's an all-time high, R1 would be placed at the all-time high figure. Could easily be broken, but still, that's resistance. That's where I have to place R1. But it could easily be broken. As such, measure the distance between S1 and S2. 4924. 2,350. That would be my R2. And then we already have R3, 2.4. So placing new resistance levels. RSI still at 70, so the bulls appear to be still in control. Once again, attributed to the weakening of the US dollar following Fed Chair Powell's comments yesterday. Still maintain a bullish outlook for gold, but it needs to break above R1 today. The difference between gold and oil in terms of the technical analysis that we're doing today is that we have historical data for oil. So we have old support and resistance levels. So we can use those. Whereas for gold, it's an all-time high. So if it does want to continue moving higher, in my opinion, it would have to break and form a new all-time high today. Again, yesterday we were bullish for gold. Came back down, corrected, moved higher. Would expect the same scenario to occur today if the dollar continues weakening. And for our bullish outlook to continue, it would have to break above R1 of 2,302. If it does not, I would switch for a bearish outlook. Simply put, because S1 is far too close to the price action. So a sideways motion between S1 and R1, in my opinion, is unlikely to occur based on the fact that my support level, my own personal support level, is too close to R1. If my S1 was down here, perhaps we could it could potentially have been a case for a sideways moving bias, but it's broken above resistance, turned to support, come back down, potentially moving higher. If it breaks below S1 and then moves below the down upwards moving trend line, could actually take aim for S2 at 2,338. If you disagree with the S1 level being placed here, that's okay. We have different opinions. You could place S1 here, 2,270. So giving it some room to break below and correct before moving higher. Or you could use this as an intermediate point to gauge on whether or not the bullish momentum might continue or if it switches towards a bearish outlook. But personally, I would be using the all-time high. It's too close, yes, but it's an all-time high, so resistance turned to support. But for a bearish outlook to occur, I'd like to see it break below S1, clear break below this higher low, and then next target could be S2. So S1, S2, then you have resistance. If I'm not mistaken, Nasdaq sideways between S1 and R1. We could maintain that view as well. Low market volatility, RSI at 50. Then you have if you look at the chart for NVIDIA, moving lower. Now, if you like Disney, so there was a well-watched proxy war going on yesterday. Bob Iger managed to fend off the challenges from the activists, but that could actually weigh on the company's stock price. So we could maintain a bearish outlook for Disney. ARM. Okay. So we had placed resistance, broke above, validated as a resistance level on numerous occasions. Sideways between S1 and R1. Done Disney. Could do UBS, or if there's anything you'd like to see in particular, we could have a look. Google. I would be bullish on Google based on the news releases that came out, that they may be switching to a subscription-based model in terms of using their AI. Would also allow the company to diversify from ad revenue from Google searches. So overall, might be good for the company's stock price. Technicals seem to support that theory as well. This was a gap up, RSI at 70. I would be bullish for the company's stock price. So I'd have S1 here at where it gapped up, found support, move higher, support around here, 152.95, which was my old R3. So then it's 239.82. And then for resistance, let's see. Okay. For resistance, measuring the gap between S1 and S2, 62 ticks. 159. And then 165. And then we could put 170. Big figure, psychological as well. So I have R1, R2, R3. Just remove the text labels. Appears to be bullish. Upwards moving trend line. You have one, two, three touches. Supposed to be valid. We're ignoring this here because it gapped up. Let's see volume as well. Decreasing volume could also imply that the bulls might be losing some momentum. And I have accidentally removed R1. Okay. 159. Go. Bullish as long as it stays above S1. If it breaks below, switch for a sideways bias, potentially between S1 and S2. So support and resistance. If it manages to break below S2 as well, I would be bearish for the company stock price. Tesla, following their deliveries being lower than expected, some concern for the company's stock price. Note that it's still bouncing off S1, 152.65. Our side 40 implies bearish tendencies, but for a bearish outlook to occur, would have to break below S1. Next target could be 137.25. If it doesn't break below S1 today, I'd switch for a sideways bias between S1 and R1, given that the Bollinger Bands appear to have narrowed, implying low market volatility, and it's failing to break below S1. So between S1 and R1. If it breaks above R1, switch for a bullish outlook, taking aim for potential resistance at 207.70. And I'm purposely ignoring this lower level here because this is where it gapped below. I think there is more selling pressure here rather than here. So more of a significant resistance level. Nvidia, as we said yesterday, the bulls appear to be losing momentum. RSI is dropping back to 50, so I'd maintain a sideways bias. 955 for R1, S1 833.70. Note that it's broken below the mid-range of the Bollinger Bands, and thus could potentially support the theory of a sideways bias between S1 and R1. So even if it does move lower, it could potentially bounce off S1 and stay between this range. S&P 500 also finding troubles to break above R1. It's more bullish than the Nasdaq though. It's broken below the upwards moving channel, but still above the mid-range. RSI 62, whereas for the Nasdaq it's at 56. So the S&P 500 is more bullish than the Nasdaq. Then Dow Jones yesterday rested on our support level, 39k, 39,140 to be precise. RSI 50 could be a sideways bias as well, but I'd like it to stay above S1 and stay between S1 and R1. Breaks below, I would switch for a bearish outlook, taking aim for S2 at 38k. And then let's see, what else could we do? I think we've done the British pound. We've done the Canadian dollar, JPY. We've done the Aussie as well. No need to do Airbus now. Boeing staying below. So this was support turned to resistance, turned to support, turned back to resistance. And as we've said, I would still maintain a bearish outlook on the company stock price. But now you could actually switch for a sideways bias as long as it stays above S1. Let's see. Facebook. Is there anything of interest? Coca-Cola, New Zealand dollar, UBS, Ferrari. We could do Ferrari. If I'm not mistaken, Ferrari got downgraded yesterday, which could be weighing on the company's stock price. Look at the technicals, RSI is at 35, so implying bearish tendencies for the company's stock price. I would bring my R2 slightly lower to reflect the price action. 442.60. We could keep R3 at 468, R1 428, and keep that as well. Note near if this was 410 with it. 410 coinciding with this bullish candle's wick. If it breaks below S1, I would switch for a bearish outlook. I think it's recovered, but for me to maintain a sideways bias, I would like to see it take aim for R1. But if it opens and moves lower, could be a bearish outlook if it breaks below S1. Next target could be 390.30. Let's add something else as well. Let's add the Bollinger Bands. So this could be a market correction. Drop below the Bollinger Bands, correcting higher before moving lower. So I expect it to stay potentially between S1 and R1. If it breaks above R1, I would switch for a bullish outlook, but that does not appear to be the case at this point in time. So this kind of may have been a correction before continuing on its descent. And with that, that does it for today. Thank you for watching.
Joined, we're going to be talking about how you can set up your trading journal and a couple of important pointers as well. So before we get started, as per usual, a risk warning: our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suited for everyone, and you should ensure that you understand the risk involved. A disclaimer: the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. Redistribution. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So I'm Melanie. I'm an investment analyst from Everest Fortune Group, who are finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here's our agenda for today. We're gonna talk about how you can get the most out of your My FX book. We're gonna talk about optimizing a strategy. So what's the best days, best times, best techniques as well. And also we'll be talking about the best direction, so how exactly you can do a bit of trend trading. Okay, let's get started. So what exactly is a trading journal? So it's basically like a diary, and it's a way for you to track your trading performance by recording all of your trades. So you can start a manual or an Excel sheet or an automated trade journal, and I'll show you guys some examples in a little bit. So, importance of a trade journal. So, before we dive into the specifics, let's quickly touch on why exactly having a trade journal is crucial. So, trading journals, as we mentioned earlier, serves as your personal trading diary. So, it helps you to track your trades, analyze your performance, and ultimately improve your results over time. So, some points on why exactly you should start using a trading journal. Firstly, is to track your progress. So it basically provides insights into your performance and helps you to identify patterns in your trades. This also helps you to learn from your mistakes because you're recording your trades and understanding the reasoning behind them so that you can learn from your mistakes, avoid repeating them in the future. Okay, so this self-reflection is crucial for continuous improvement as a trader. Next is to develop discipline. So maintaining a trading journal instills discipline in your trading approach because it encourages you to stick to your trading plan and avoid impulsive decisions by holding yourself accountable for your actions. So I'm sure if any of you guys have ever traded, you will know how difficult it is to really maintain and stick to your trading plan, especially when it's not going according to your plan. Okay, so next, evaluate strategies. So you can identify which strategies are working well and which ones need adjustment or refinement. So this helps you to basically evaluate the effectiveness of your trading strategies. Manage emotions. So emotions can significantly impact trading decisions. So as I mentioned earlier, when a trade doesn't go according to your plan, um, having a trading journal basically helps you to manage those impulsive emotions by providing a structured way to review your trades in an objective manner so that it reduces the influence of fear or greed on your trading decisions. So this also helps you to set realistic goals and track your goals so that you can stay focused and motivated. Improve decision making. We kind of talked about this already. Enhance accountability. So when you're keeping a trading journal, it encourages transparency and honesty with yourself about your performance, fostering a culture of responsibility in your trading approach. Okay, so let's look at MyFX Book. So MyFX Book is a powerful tool for tracking, analyzing, and sharing your trading results. So from setting up your account to utilizing advanced features, we'll talk a bit about how to leverage MyFX Book to its fullest potential. Okay, so let's start off with what should you monitor in your journal. So typically, a trading journal should include the date and time of your trade, basically the open as well as close, the instrument being traded, so whether it's dollar yen, euro dollar, gold, WTI, position size, yeah, and then direction, whether you're going in for a buy or a sell, entry and exit points, trade result once your position is closed, profit and loss at an absolute level as a percentage of the account size, and your risk and reward. So how can your journal improve your trading? So we briefly talked about this earlier, but basically since you are able to review your trading activity over various time frames, so daily, weekly, or monthly, it will allow you to find the right trading style, whether you are a swing trader, position trader, intraday, or scalper, and identify your strengths and weaknesses, improve your risk management, as well as have discipline. Okay, so how do you set up your trading journal? Basically, you first have to choose a format, decide on what categories you're going to be trading, followed by capturing trade details, analyze trade performance, reflect on the emotional factors, review and adapt, and maintain discipline. Okay, so these are some of the skills that you will be developing when you set up your trading journal. Performance analysis, learning and development, emotional awareness, risk management, trade planning and execution, accountability and discipline, and confidence building. Okay, so let's talk about these examples really quickly. Okay, so there are a couple of examples that we've included here about how to create a forex trading journal. So this example is in Excel, so by using an Excel spreadsheet. This example over here, so all of these are automated. So this one is manual because obviously you have to type in the data yourself, as you can see in this example here. Okay, but yeah, so this will basically look like, this is what your spreadsheet should look like. With the initial, maximum, the date, the profit and loss. Yeah. Okay. Yeah, and then for automated tradings, you can read this website as well. Okay, there are some which are free and some that you have to pay for. Okay, so the manual option is obviously free since you have to set up the table yourself. So it's really up to you and your own trading strategy. Okay, so you can go ahead and take a look at these two websites. Yeah, I'll go ahead and pop these two websites in the chat as well. So the one that I'm popping into the chat now is the manual one. Okay, and then the automated one is over here. So I won't go too in depth into how to set up your automated trading journal because I think if you go into the website, it will tell you exactly how to do it. So yeah, let's just move on. You can also look at Forex Book. Okay, yeah, so these are just some of our recommendations. Of course, it's completely up to you and your objectives when you're deciding which of these to choose from. But yeah, these are just some of our suggestions. Okay. Okay, let's move on. So let's talk a bit about optimizing your strategy. So a trading journal is not just about recording your trades, but also about analyzing them to identify patterns and areas for improvement. So let's talk a bit about some strategies for analyzing your trades and refining your approach for better results. So firstly, let's start off by talking about the best times to trade. So market volatility happens throughout the week and it varies. So we're going to talk about which days tend to have higher volatility and better trading opportunities. And we're also going to introduce economic calendars and how you can utilize them to identify when market volatility is the highest. Okay, so let's look at what exactly is an FX news calendar. So firstly, on the left, over here, we have investing.com. And on the right is forexfactory.com, which is the one that I typically prefer to use. Yeah, but they're basically about the same. They give you the dates that you're looking for. You can filter the dates. So if you're looking at this week's economic data releases, you can just filter it to look at this week or this month. And then as you can see from these little colored calendars, it also filters by low to high impact events. And it gives you the forecasted values, the previous values, as well as the actual values once the data is released. Okay, so these FX news calendars are important because it allows you to see at one glance all of the important economic data releases. And these data releases often create more volatility in the markets, so it's important to take note of them. So it shows you the key events such as the GDP, CPI, NFP, crude oil inventories, and even central banks' monetary policy meetings. Okay, so let's understand some high impact events. Firstly, we are looking at the US. So FOMC meetings are the Federal Open Market Committee, and this is the US Fed's way of communicating their view on monetary policies. So these normally come together with a Fed interest rate decision. So if the Fed is dovish, the USD is bearish, and if the Fed is hawkish, the USD is bullish. If interest rate goes up, the USD is bullish, and if interest rate goes down, the USD is bearish. Okay, next we have NFP or non-farm payroll, which measures the change in citizens that are employed from the previous month, excluding the farming industry. Unemployment rate measures the total unemployment of workforce that is seeking active employment from the previous month. Okay, and now crude oil inventory. So these measure the weekly change in the amount of crude held by US firms. So if crude inventories increase, they are inversely related to oil prices, so we can expect oil prices to drop. EIA is Energy Information Admin, and this is a short-term outlook. So it's basically the monthly forecast for the year ahead, the demand and prices across major fuel types. Okay, so some benefits of using the FX calendar. Depending on your individual trading style, it can help to plan trades and allocations for the day, week, or month ahead. And it also helps to alert the individual to upcoming important news events that may affect volatility. Let me know if you guys have any questions so far. Okay, if there are no questions, let's move on. Okay, so now we are getting into kind of the fun part. We're gonna talk about some of our favorite techniques, or some techniques that you should maybe take note of. Firstly, of course, I'm just gonna touch really quickly on this because we recently finished our Fibonacci series. So if you missed that, I think it's probably uploaded on YouTube, but if not, you can email IronFX on their website and they will probably send you the recording or give you the link. Yeah. So I'm just going to briefly talk about the checklist and what things you should look out for. Okay. So for Fibonacci, there are a couple of steps. Firstly, is the market structure clear? So you want to look for big zigzags, and we want to see, a very clear market structure, so clear up or down. Okay. Yeah. So next, identify the recent trend. So are prices going down or up? So it's important to always follow the general trend. Next is to identify recent major swing lows and recent major swing highs. And lastly, connect the two extreme points from the highest to lowest for a downtrend and the lowest to highest for an uptrend. Okay, so let's move on. Next, which is quite important, is your take profit and stop loss levels. Okay, so for your take profit and stop loss levels, it's important to place your stop loss beyond a key confluence level, or if you look here, a key major resistance level. So in this case, we are going in for a sell since our take profit is below. So since we're going in for a sell, we will place our take profit before any levels. So in this case, it will be above any major support level. And for stop loss, we will place it beyond any major resistance level. So in this case, we're placing it above. Okay, so the reason for this is because price is attracted to such strong areas of Fibonacci confluence, or even if it's just multiple swing high levels that line up in the same area, that's also a major resistance area. So price is attracted to these areas. So if your stop loss is right before these areas instead of beyond it, you will most likely get stopped out before the market reverses. So like you can see over here, we would most likely get stopped out if we had placed the stop loss slightly below. Okay, for take profit, we typically recommend to place your take profit before a key Fibonacci confluence area, because when price reaches any significant area, there is a high chance that it won't be able to go beyond it. So instead of reaching your profit target, it reverses back to your entry, or even worse, your stop loss. And this is one of the reasons why people complain that the market is being manipulated, because they might miss that take profit by 1 or 2 pips. Okay? So now let's talk about another technique, which is the trailing stop loss. So in our previous slide, we talked about, we go back. So this is kind of a fixed stop loss template. So if we talk about trailing stop loss, it's a type of stop loss that is set at a certain percentage or dollar amount away from the market price. So the idea behind a trailing stop loss is to lock in profits while giving the trade room to breathe. So basically, it means that the stop loss basically follows the market price as it moves in favor of the trade. So the example I have here is we're talking about stocks, but the idea is pretty similar if we're talking about currency. So let's say you buy a stock at $100 and you set a trading stop loss at $10. As the stock price rises to 110, the stop loss will follow, now at $100, since 110 minus $10. So if the stock price drops to $100, your stop loss will trigger, selling your position and protecting your profits. The trailing stop loss technique can be useful for traders because it allows them to manage risk and lock in profits dynamically as the market moves. So this is different from a fixed stop loss, which is set at a specific price and does not change as the market moves. So it's important to note that a strict trading stop loss is not a guarantee that you will exit the trade at the desired price. Market conditions such as gaps or rapid price movements can trigger a stop loss order before it reaches the desired level, leading to an unexpected exit from the trade. Therefore, it's important to use trading stop loss in combination with a solid risk management strategy. Okay, I just realized I didn't show you guys the FX news calendar that we like to use. So let me do that now. Okay, so earlier I talked about Forex Factory being one of the FX news calendars that we like to use. So if you click on the date, so when you go into the page, it looks like this. And clicking on the date, you can select this week, apply settings, and you get the whole list of news events for this week. So if you click on this green icon, you can see that I've filtered it to only the high and medium impact events. But you can select all, you can filter out the currencies that you're looking at and the different event types, apply filter. And yeah, you can see once the actual result is released, it will update. But it will also give you the forecasted values, predicted values, forecasted as well as previous values, and the currencies as well as the different times. Okay. Also, if you weren't here for the Fibonacci webinars, you can also go onto forexalme.com over here. Okay, and you can click on trading guides. How to draw Fibonacci retracement correctly, and it gives you a pretty in-depth explanation on how to draw Fibonacci's. So we have a couple of videos for you to watch as well. What to look out for, unclear and clear market structures. Yeah, what to look out for, checklist. Yeah. So there are also different techniques for Fibonacci. So we're going, I think in this guide we go through each of them. So we have retracement up above there, as well as the different other Fibonacci techniques. So here we are combining them in order to find Fibonacci confluence levels. Yep, so feel free to go ahead and take a look. Okay, let's get back to my slides. Okay, so let's look at the different methods of trailing stop loss. So here's a summary of the different types of trailing stop loss methods that we'll be going through today. Just really briefly, firstly is the moving average indicator, followed by parabolic star, chandelier, ATR indicator, support and resistance levels, and a combination of these methods. Firstly, we'll start off with looking at the moving average. Okay, so you can see that using our MA, the trailing stop loss is triggered when price basically breaks out of it and moves above the moving average. So I think that's pretty straightforward. You can see in this example as well that it got us out before price started to increase. If we look at a trend line breakout, okay, actually this line here is kind of a trend line breakout. The only issue why we can't call it a trend line breakout is because trend lines have to have a minimum of 3 touches in order to be considered valid. And you can see in this case, we only have 2, okay, before price broke out of the trend line. So when price breaks out the trend line, that's typically a sign that price is going to move in the opposite direction, which it did. So when it moved in this downtrend, so we went in for a sell entry, and then placing this trend line here, we got out when price breaks out of the descending trend line. I think that's pretty straightforward. So let's look at parabolic SAR. So kind of the same concept. Here you see when price moves below the parabolic SAR, it's typically giving us a bearish signal. So when price begins to move above the parabolic SAR, you can see that it's moving above it. It's even broken out of the top, the upper side of the indicator. Okay, so that's a sign that trend is going to change. Okay, chandelier and ATR, same concept as well. Price is moving below, giving us a bearish signal. Once price moves above or breaks above these indicators, then both of them are triggered and our stop loss, and we get out of the trade. So I think that's pretty straightforward because all of these concepts are pretty similar just by using different indicators so that you can kind of substantiate your analysis to show that, okay, price is really breaking out over here, the trend is really changing, so I should get out of the trade. Okay. In this example, so this is just another example. In this case, we have a fixed stop loss. You can see it's a fixed stop loss at the swing high. Our sell entry is here when price breaks below this line. And also it's moving below our moving average. Here's our take profits over here. So you can see instead of just leaving our stop loss here, which you can see is really far away from where price is currently at, by using a trailing stop loss, we can get out of the trade right when price breaks above this level here. Similarly, in this case, price is breaking out of this descending trend line. Stop loss is placed slightly above. Like we mentioned earlier, stop loss should be placed beyond, take profit should be placed before. So we're going in for a sell entry and going towards a take profit over here. Okay. Okay, now let's look at using breakouts as trading stop loss. So breakouts are usually high volatility events and price can spike up and reverse almost as quickly. So a stop loss will help you to manage risk, protect your capital, and a trading stop loss can help you to protect your profit like we've seen in the previous slides. Okay, so let's move on to our next technique. Okay, trend trading. So here's a super simplified breakdown of how trend trading works. Firstly, you want to identify your trend. So in a price movement of a currency pair. So this is typically done by analyzing historical price charts, and an uptrend is characterized by higher highs and higher lows, while a downtrend is characterized by lower highs and lower lows. Okay, so entry points. Once you have identify a trend, the next step is to find an entry point. So in an uptrend, you might look to enter a trade when the price has retraced or pulled back slightly from its recent high. So basically, you're anticipating that the trend will continue. But in a downtrend, you might look for a retracement before the price continues its downward movement. So next we have setting stop loss and take profit levels. So to manage risk, it's crucial to set stop loss and take profit levels. So stop loss is a predetermined price at which your trade will automatically close to limit potential losses if the market moves against you. So a take profit level is where you decide to exit the trade to lock in profits before the trade potentially reverses. Number 4, riding the trend. So once you're in the trade and the trend continues, you aim to stay in the trade as long as the trend remains intact. So basically, in this situation, you would be monitoring the price movement and adjusting your stop loss and take profit levels if needed. Or you might choose to use a trailing stop loss that we just went through as well. Lastly, exiting the trade. So this typically happens when the trend reverses. But yeah, trends don't last forever, so it's important to be vigilant and not get too greedy. And remember to decide to exit your trade and take your profits where possible. Practice analysis. So I think that's pretty self-explanatory, so I won't get into that. Okay. So pullback support and resistance. So these are pretty basic trading knowledge, I suppose. But basically, a pullback support is a strong level of support which breaks out from a previous resistance level, and price is now dropping back to visit it again. So pro tip is when a pullback support lines up with a Fibonacci level, it tends to be very powerful. Pullback resistance, on the other hand, works well when it breaks a significant swing low and then starts pulling back to it. Even better if there are multiple Fibonacci levels that line up with it. So here's an example. So you can see at the red area, price tested this level 3 times with multiple swing highs in line with one another. And once price breaks the red area, it becomes a pullback support level. Then we expect price to pull back or retrace this level, which you can see from the dotted arrows. And this is an example of a pullback resistance. So you can see once price breaks the level, it becomes a pullback resistance, and we expect price to retrace and pull back to the same level, like you can see from these red arrows. Okay, now pullback resistance. Here we have a swing low and thus a possible support level. With price passing below the swing low support, it is now a pullback resistance. Okay, so if we see in the next slide, you can see that price actually pulls back to this resistance level. And once it reaches and reverses off the pullback resistance level, it then becomes an overlap resistance level. Okay, which we will get into now. So overlap resistance occurs when price reacts off a particular level from the top and from the bottom. So the more times that it reacts off this area, the stronger the overlap area. This basically means that there are bulls and bears that are respecting that area, so it's important to take note of that. Okay, so here the pro tip is that if the overlap area lines up with other elements, such as Fibonacci or graphical elements, it will make it even stronger. So that's basically what we call the confluence areas. That applies for any support and resistance level that you can find. If you can support it with your Fibonacci, your pivot points, your pivot point indicators, that would be even better. Okay, so here's an example. Basically, you can see how once price breaks below the support at 105.643, you can see how price retraced or pulled back to this resistance level and reversed off of it, making it now an overlap resistance. Okay, here's another example. So here we have a big swing high resistance level. Price surpasses this level and becomes a pullback support where we expect price to pull back to that level. So in the green areas over here, we see price retrace this level and actually bounce off perfectly. So once price bounces off the pullback support, it then becomes an overlap support. Okay, in our second example, we see two swing highs lining up. So we have a swing high resistance. So price has surpassed this level as well and making it a pullback support. Here we can expect price to retrace to that level. So you take note of the blue circles. Price bounces off this level twice, making it a strong overlap support. Okay. Okay. In this last example, we have multiple swing lows that are in line at the 33420 level. So once price breaks this level, it becomes a pullback resistance. We can see price has tested this level 3 times, 1, 2, 3 over here, making it a strong overlap resistance level. And then once price surpasses again, then it becomes a pullback support. And once it bounces off that level, it then becomes an overlap support. I think by now you guys have gotten it. So let's move on to our last technique. Okay, so how do you identify a trend? Okay, I briefly talked about this earlier. So how you can identify trends is obviously you can just look at the charts and you tend to be able to identify whether it's ascending or it's moving in a downtrend or whether it is ranging. But if you want to be extra certain, you can try looking for trend lines and trend channels. So what makes a valid trend line is if there are at least 3 significant touches. For an ascending trend line, the touches should be on the bottom and on, yeah, so if it's descending, then the touches should be at the top. So here's another example. Okay, you can see the touches on the bottom and here as well. For descending trend lines, it should be on the top and on the bottom, but same thing, we are looking for at least 3 significant touches. So you can see here, we have about 4, and here we have about 4 as well. Okay, so watch out for at least 3 significant touches for it to be considered a valid trend line, like over here. Okay, and you can see on the 4th touch, price is playing the reaction. Okay, so let me know if you guys think that this trend line is valid or not in the chat. Okay, someone said that it's not valid. Yep, so it is not valid because we mentioned that if it's a descending trend channel or trend line, the touch has to be on the top and not on the bottom. Okay, so if we look at drawing valid channels, the valid channels are if there are at least 4 significant touches, 2 at the top and 2 at the bottom. Okay, over here, this is an example of a descending trend channel. So it doesn't have to be consecutive like this or like this, but just as long as there are 2 touches. Okay, now let's look at the different indicators that you can use to identify the trend. Okay, so firstly is Ichimoku cloud. So breaking down the lines, it consists of several components, and it's basically composed of 5 lines or calculations, 2 of which comprise a cloud where the difference between the 2 lines is shaded in. The lines include a 9-period average, a 26-period average, an average of those 2 averages, a 52-period average, and a lagging closing price line. So the cloud is a key part of the indicator. Okay, so let's look at breaking down the lines. So basically, when the price is below the cloud, the trend is bearish, or the signal over here is bearish. When price is above the cloud, the trend is up, or the signal is bullish. Trend signals are strengthened if the cloud is moving in the same direction as the price. So for example, during an uptrend, the top of the cloud is moving upwards, or during a downtrend, the bottom of the cloud is moving down. Okay, so let's break down the different lines. Okay, we have the Tenkan-sen or conversion line, and this is the average of the highest high and the lowest low over the past 9 periods. The Kijun-sen or baseline is the average of the highest high and lowest low over the past 26 periods. Chico's span or lagging span is the current closing price plotted 26 periods behind the current time. And Senko span A or leading span A is the average of the Tenkan Sen and Kijun Sen plotted 26 periods ahead of the current time, used as a leading indicator of the trend. Okay, Senko span B or leading span B is the average of the highest high and lowest low over the past 52 periods, plotted 26 periods ahead of the current time, used as a leading indicator of the trend. Okay, explaining the lines. So the first way to use Ichimoku is to identify trends. Basically, the Tenkan-sen and the Kijun-sen. Tenkan-sen is the one in blue, Kijun-sen is the one in red. Those are used to identify the trend of the market. So a bullish trend occurs when the Tenkan-sen is above the Kijun-sen, and a bearish trend occurs when the Tenkan-sen is below the Kijun-sen. Okay, you can also use your Ichimoku indicator to determine support and resistance levels. Okay, now the third way to use Ichimoku is for confirmation. So the Chikou span is used to confirm the signals that's generated by the other lines. And if the Chikou span is above the current price, it confirms a bullish trend. If the Chikou span is below, then it confirms a bearish trend. Okay? So Ichimoku generates buy and sell signals based on positions of the various components. So for example, a buy signal is generated when the Tenkan-sen crosses above the Kijun-sen and Senko span. And a sell signal is generated when the Tenkan-sen crosses below the Kijun-sen. Okay, so how can you effectively use this indicator? So basically, the overall trend is up when the price is above the cloud and down when the price is below the cloud. Yep, and trendless or transitioning when the price is within the cloud. Okay, so of course you can also use support and resistance, as we mentioned earlier. So yeah, so you can see when price is moving below the cloud, it is bearish. When price is moving above the cloud, then it's bullish. Within the cloud is typically transitioning. Okay, another way is price and MA cross. So if you're a beginner, this is a great way to identify moving averages of different periods to analyze price movements and generate buy or sell signals. I won't get into it, but yeah, this strategy basically captures trends and works best in trending markets. Next, we have the Golden Death Cross, which is a strategy based on the intersection of two important moving averages on a price chart. Okay, so I'm not going to explain how the indicator works, but basically, when you see a golden cross, it's a bullish signal. When you see a death cross, then it's a bearish signal. Okay, channels as well. You can see when price hits the sides of the channel, that's typically a sign that price is reversing off of the channel. Okay, so when you are deciding which settings to use for your moving averages, try and make sure that it touches the bottom of the bottom or the top of the price as much as possible. Same for natural moving averages. And a double break is basically when price breaks below the moving average as well as your trend channel. So basically, as I mentioned earlier, when you have an analysis, you want to try and make sure that you use different indicators to support that analysis. Okay? Yep, so that's what we call confluence. You can see in this case, we are using a trend channel, Ichimoku, as well as moving average, as well as your death cross. Okay, you can see we see this price moving upwards. Okay, so to wrap things up, we'll quickly go through the disadvantages of trend trading. So basically, it can give you false signals, late entries, some choppiness as well, whipsaw trades, which basically means that traders enter and exit positions quickly due to volatile price movements, which can result in losses. Limited profits in ranging markets, and it might require timely decision making, and lastly, noisy price data. So to overcome it, you want to make sure that you have all of these in check, and how you can make sure these are in check is by basically making sure that you use a trading journal so that you can track your trades, track your strategies to see what works and what doesn't. Okay, and this is just to show you guys what an unclear market structure looks like on a 15-minute time frame. You can see it's pretty messy. There's no clear price movements. But when we change to 1 hour, you can see it's pretty clear. Okay, so yeah, so this is just a kind of a rule of thumb to live by. So if the clearer the swing low, the clearer the swing high, the clearer the trend between these 2 points, the more accurate your analysis will be. Okay, that brings us to the end of my slides. Thank you guys so much for joining me today. I hope you guys found this helpful. And yeah, have a great rest of your week, and I'll see you guys next week. Bye, everyone. Thanks, everyone. Bye.